Welcome on board Chakri Lokapriya as well, who's joining in on the show. Chakri, thanks so much for taking time out. Let's get in your take then first up on the entire Capex theme, going by the fact that there is a lot of optimism on manufacturing picking up, earnings, order booking activity as well looking strong. What's your outlook on the Capex theme and how would you play it from a stock-specific standpoint?
Good morning and thank you. And if you travel across the country today, you can see that India is like a construction site. So everywhere you see men at work boards. And if you look at the capex of the government, both the central government and the state governments, for the central government, it's a very big figure, something like 10 lakh crores. For the states, different states, the most industrialized states, which are the South and Maharashtra, their capex is up very strongly. So this naturally lends to all the construction names and the manufacturing names. So which is right from the big ones like the L&T, which has already met its 2/3 of its guidance, and it looks like it will beat for the year. So which means it's the company's valuation is still very attractive, and several manufacturing names across board, including the EPC companies. If you look at road construction, has actually been weak. So if that picks up, then the EPC names will also start doing well.
What's your take on autos? The four-wheeler, two-wheeler category. Any name that comes to mind?
All the auto names have actually done very, very well. As Kunal just explained. Against that backdrop, if you look at the companies which have a sound EV backbone and EV plans like Tata, TVS Motors, M&M to an extent, but it's more a sum of parts story. So I think TVS Motors, Tata Motors, both look good. And I think still there is enough fundamental run-up left in the stocks.
When it comes to the entire sugar space, of course, you see spurts of action as and when there is a little bit of news supporting these counters. But what's the outlook by and large on sugar?
Sugar as a sector, we don't really invest that much. And so I'm sorry, I wouldn't be able to provide you any inputs on that.
Enough. What about when it comes to auto ancillary, tire stocks, battery stocks, etc.?
The auto ancillary stocks, many of them have actually underperformed for quite some time. So companies like Minda, I think, or Motherson wiring, these are looking extremely strong because now they had suffered to an extent because of some amount of export volume weakness, and also in realigning their business portfolios. So I think now that is largely underway. The valuations have corrected. The earnings, so you have seen a margin expansion. So I think Motherson, Sumi wiring, as well as Minda look very good.
Okay, let's take a pause. Two-wheeler space, considering how competitive it is getting, post the Bajaj stable launch, post what we heard from Hero, there was that big threat for Royal Enfield, and thereby you did see some price correction as well come by on Eicher Motors. Having said that, it continues to be the dominant player within the two-wheeler market with the maximum market share. But do you think Bajaj and Hero, or either of them, could have the might to give RE a tough competition?
Both Bajaj and Hero today have world-class products in terms of both Harley and Triumph, which bikes are now available at Indian prices and therefore present a very serious competition to Eicher Motors. So from that perspective, yes, it has had a dominant market share and therefore it's had those premium multiples. But now the competition coming in, I think that margins will start trending down and so will the multiples. So I think that's something we need to watch out for.
Okay, and Sumit is back with us. So let's take it. It very well could be the contra call.
Indeed, Hindalco's numbers, Novelis numbers have been very good. The stock has underperformed and the valuation is pretty much on its side. So I think, from a positional investment, so maybe the multiples marginally expands and therefore gives you like a 10% run. But as a space, I think clearly it's something which we still, I think it's to avoid for, given the global turmoil. Metals are still at a cyclical stay away from.
All right. In fact, let's put the spotlight then on
in the entire specialty chemicals and fertilizer space. Anything that you're liking right now?
In the specialty chemical space, if you see that US is in the export revenue, which was the big growth driver for all these companies, which saw a huge re-rating, that is kind of weak. The US market is weak. Europe is, of course, weaker. And actually, Asia, the Asian markets are still very strong and are strong for the chemical industry. So against these backdrops, the valuations have corrected quite a lot. And mind you, the revenue as well as the EPS have also been downgraded. There's been a margin contraction. And therefore, the immediate business catalyst for these companies is the valuation. So we need to wait for an uptick in the business momentum, which I still think is a good couple of quarters away, because I think companies are waiting around the world for a peak of US margins, because that determines working capital costs. So I think still chemicals, valuations on the side, but still a couple of quarters away.
On the back of, FMP, which is one of the largest US players within the segment.
DLF, Shoba, these two companies, I mean, even Prestige for that matter, they all look very strong. They've all done very well, but their order books, their inventory clearances have been exceedingly strong. Against this backdrop, I think you will see margin expansion. Therefore, yes, these three stocks.
Okay, thanks very much, Chakri, for taking time out and joining in on the show. All right, what are the pre-open rates indicating this morning? An uptick. So 19,500 here on the screen with